In the first part of this video, I went ahead and did some basic data transformations and showed you some of the filtering that can be done. And I'm going to continue on, and I'm going to start by sort of presenting the data in an aggregate form. One of the easiest ways to do that is with some charts. All right, so the first chart I'm going to make is going to be a scatter plot of the dollar change versus the number of standard deviation change. All right, and I'm going to present this as an absolute value of that standard deviation change, since in general the standard deviation is positive. So the first thing I'm going to do is calculate the absolute standard deviation. All right, I'm going to do that using the absolute value function, just ABS. All right, and I'm going to clear out the values that are sort of meaningless. Okay, so now I'm ready to create my chart, and I'm going to select all the data in that column, and I'm going to also select the data in the change column. Okay, I'll go to the Charts tab, and I will insert a scatter plot. Okay, let me move it to where we can actually see it here. And I'll get rid of the legend, just spread things out a little bit, make it maybe a little bit easier to see it. We can see that most of the data is clumped down here below 2 standard deviations. All right, and this chart just basically gives you an idea of how volatile the stock can be. All right, yeah, we expect most of the activity to be happening down in here anyway. Okay, but when you have lots of points above the 2 standard deviation line, all right, it indicates that, well, this stock tends to be a little bit more volatile than one might expect if it does follow a normal distribution. All right, so this may present some opportunity. All right, one thing we don't see from the scatter plot is when these big movements occurred. Okay, and so we can create a simple bar chart to get an idea of when movements occurred and see if there's any sort of trend that's apparent in that chart. So I'm going to make a column chart, and the column chart's just going to be of the absolute, the actual magnitude plus or minus standard deviation move, and it's going to be a time series. All right, so I'm just going to insert a column chart. All right, and so quickly looking at this, we can see it basically tells the same story. Most of the movements are within that plus or minus 2 standard deviations. Okay, but we get these big spikes periodically. All right, and a careful analysis of this may suggest when a big spike is going to occur. All right, I'm assuming that these really big spikes here, okay, are around earnings announcements. Okay. Okay, another thing we can do is to look at more aggregate data cuts. Okay, so I can just filter things out, things that I think are important, or I can try to look at all of the data in a different view. I'm going to use a pivot table to do that. Okay, so in the Mac OS, the pivot table is going to be under the data menu. Okay, if you're on a PC, you just go to the insert menu or the insert tab and insert a pivot table. All right, and as long as I'm anywhere in the data set, Excel should know to try to go ahead and look up and to the left, down, and to the right to select the whole data set. All right, so I'm just going to insert it in a new worksheet, and we get just sort of an empty pivot table to start with. All right, and what I'm going to do is look at, again, these standard deviation moves, so the actual magnitude. All right, I'm going to click and drag that down into the rows labels here. All right, and we can see that, well, we're not really getting any aggregate values here, okay, because no 2 days are going to have the exact same change, with the exception of when there was 0 change. Okay, so what I'm going to do is group this data. All right, so I'm going to right click over one of the values. I'm going to select group. All right, and in this dialog box we get some options. Here's how they suggest we group it. All right, so it shows the lowest value and the highest value and suggests grouping by units of 1. All right, I'm almost going to do that, but I'm going to start at -4. All right, so I'm going to get rid of all the decimals here, and I'm going to go up to +4. And what this is going to do is place anything beyond those breakpoints in one category. All right. So we can see now that, okay, we're going to have bins that sort of break the data out by 1 unit of standard deviation movement. Okay, and then I'm going to go ahead and grab absolute magnitude again and drop it in the values area. Okay, and let me zoom in on that a little bit so you can see what's going on a little better. Okay, so now we get counts of days with specific standard deviation movement. So we can see that there were 2 days where there were between a -3 and -4 standard deviation movement. Okay, and going up to the other end, we can see that there were 2 days where there was a +3 to 4 standard deviation movement, and you can see that there were very few values outside that. All right, and we can also see that most of the movements are within ±1 standard deviation. Okay, and you might want to graph that to see what it looks like. I'm going to go ahead and select the data, and I'm going to make a histogram. Okay, so I'm just going to modify this a little bit. All right, we can see already that if you're familiar with the normal curve, that, yeah, basically this does sort of follow a normal curve. All right, I'm going to change the x-axis so that it reflects our categories. All right, and since this is continuous data, I am going to minimize the gaps in between. Okay, so right now the gaps are 150%. I'm going to leave just a little bit of daylight there so we can see where each standard deviation bin breaks. All right, but basically these the bars should be touching. Okay. All right, so we can see again that, yes, this basically does look like sort of a normal curve. All right, but then if we look a little more carefully, we see that, well, it tends to sort of move to the downward side maybe a little bit more frequently than it moves to the upward side. All right, so there may be something that you can develop for a strategy based on that knowledge. Okay. I'm going to do one other thing. I'm going to change this up just a little bit just to show you that, yep, there's a lot of stuff you can do with pivot tables. I'm not going to have a chance to show you everything here, but just giving you some ideas hopefully will get you on the way. I'm going to get rid of the count here of standard deviation moves. Okay. And in its place, what I'm going to do is put the daily volatility. Okay, so what we're going to be able to do here is see, okay, on a specific day, Okay, what was the volatility when Priceline made a specific move? Okay, and to do this, I don't want the count anymore. What I want is maybe an average. Okay, that's probably a good place to start. So I'm going to get the average of volatility on a specific day move. Okay, so we can see that that tells a much different story. All right, and in general, we can see that most of the time, you know, the volatility is around between 1.1, 1.5%, something like that. All right. The interesting thing we can see here is that, on days where it made big moves to the downside, the volatility was a lot lower than what we see generally. Okay, so what this means is that the days leading up to these big moves down were relatively quiet. All right, that's what would lead to a low volatility. Okay. All right, that's about all I'm going to show you with pivot tables. All right.